What is up, guys? My name is Hassan and welcome back, everyone. Recently, I bought a new company and I think it's worth that you guys take a look. So today I'm going to give you guys a stock analysis on PETMED Express, ticker symbol PETS. As always, before I continue, I have to give you guys a quick disclaimer. I'm not a financial advisor, nor do I know you personally or your financial situation. I am not responsible for any of your gains or losses in the stock market. My suggestions are only suggestions. That does not mean you go out and buy these stocks. It is just a place for you to start your own due diligence and hold yourself accountable for if you do decide to buy the shares. Since we got that out of the way, so pet medication or PetMed Express is pretty much sells pet medication online. They have no physical store that you can go out and buy the product. Everything is done online, which they save rent money by not having these physical stores. And I think that's one of the ways they're able to sell these products for a cheaper price. So I'm going to give you a quick overview of the company. So as I said, that they sell medications online, and if you guys go to Yahoo Finance, pretty much operates as a pet pharmacy in the United States. You guys can see that right here. And the company also sells foods, beds, strollers, and other pet supplies directly to the consumer through their online website. So currently, I'm going to show you guys how many shares I bought. So you guys, this is my Robinhood portfolio. I have $10,700 or $10,800. So if I scroll down all the way down, that you guys can actually see that I have PETS and I have 6 shares at an average cost of $18.16, which actually I'm up 14% already. So I just want to make sure, or when I bought the shares, so I bought the shares on September 9th at 1680, about 6 shares. So I'm actually looking to add more of it, but the price just went up too high for me to buy it right away, buy more of it. So let's take a look at the company. So I'm on Yahoo Finance. So let's go to summary, and we see that PetMed has pretty much has a PE of 12.4, has a dividend of paying 6%, or in other words, it's giving you guys or us $1.08 per share. So if we pull out our calculator, if we take $1.08, we divide it by 4 because there's 4 quarters, or pretty much, or 27 cents per share every 3 months. I'm looking to have at least about 25 shares to start off with. So if I do 25 times 0.27, I should get about around $6.75. So let's look at their financials. So the dividend is good, the PEE is good. Let's go to their details. So another thing I want to point out is that their revenue is year after year is pretty much increasing, which is a good sign, and this shows that the company is actually increasing. Or in other words, they are still growing. Let's look at financials. I like to look at their balance sheet. We already talked about they have their cash around 100 million. And then if you look at, one of the best things about this company that attracts me the most is that if you look at their short-term debt, it's pretty much zero. And if you look at their long-term debt, is also zero, which makes it very attractive. So this company has zero debt, making it an awesome company to invest in, or in other words, is pretty much recession proof. And these are the types of companies, these are solid companies that I'm always looking to invest. But on a sad note, that the company, I'm already up 14%. The reason why I say it's a sad note, because I didn't get an opportunity to invest more of it, or I always like to average down versus averaging up. So one of the short-term turbulence that the company is facing is that they missed their last three earnings. And you can see that in the report here is that they missed on the Q4 2018, they missed by 10 cents, and then Q1 they also missed it, and then Q2 of 2019 they also missed it. So pretty much 3 quarters in a row they missed their earnings. And they're also facing a lot of competition from their competitor. And let's check out their website. Also facing a lot of competition from Chewy.com. I use their website and it seems pretty awesome and very friendly user. At the end of the day, it'll come down to who has better pricing. So in other words, it can actually hurt PetMed's margin. And another concern that I have is that when I asked around, including my coworkers, they're all using Chewy.com over PetMeds. And I think it's because it's a bigger company and it's more well known. So which is another issue that's concerning, that people are actually using Chewy over PetMeds. But I still think it's a buy. Another key factor that I like to look at before investing into the company is the number of outstanding shares they have. So let's take a look at that. So I usually like to use microtrends.com. So here we can see that the number of outstanding shares as time goes on here is actually decreasing, because it goes from 23, 24, and then now currently at 20 million shares, which is actually a good sign, because this shows that the company actually cares about their shareholders and they're approving the buybacks. I find buybacks are good because they reduce the amount of outstanding shares. At the same time, they reduce the amount of dividends they have to pay out. As always, I bought 6 shares of pet medication or PetMeds Express, and I'm looking to add more. Guys, do your own due diligence. As always, subscribe to my channel, hit the like button, it supports my channels. As always, thank you, see you next time.